Hello, everybody. My name is Dan Veru, and I'm the Chief Investment Officer at Palisade Capital Management. I wanted to update you on some recent events that might affect how we invest your money during the course of 2020. When I last spoke with you on January 9th, the concerns that we had at that time were rising Middle East tensions and the potential for disruptions in the oil industry. Overall, I had not been very concerned at that time, and so far those tensions seem to have abated considerably, and the global supply of oil remains flowing without any interruption. I was also saying at that time that I expected the growth that had remained resistant in the United States to begin to go global as a result of the successful trade deals with China, Mexico, and Canada. Additionally, a clearer path on Brexit, or the United Kingdom's exit from the European Union, was also made clear at that time too, which really gave a tailwind of optimism that growth would begin to accelerate around the world. We were also seeing promising signs in the Eurozone as a result of better economic activity in China and Europe in general. There's a new threat, however, that I wanted to discuss with you, and it's something that's obviously on everybody's mind, and that's the coronavirus. Our first thoughts have to be with the people who have been tragically affected by this virus. But I wanted to put things in context and how it's calibrated in our thinking. Rest assured, I and my analysts and portfolio managers are discussing this every day and looking at how potentially this could affect how we invest your money through the different companies that we look at and through the various markets that we address, whether they be the equity markets or the debt markets. I wanted to first put some things into context. As of today, 563 people, predominantly in China, have unfortunately passed away as a result of this virus, while 28,000 people have been infected. By contrast, 19 million Americans have been affected by the ordinary flu, and unfortunately 10,000 people so far this year have died as a result of the annual influenza that we face every single year. So I wanted to put that into context. This is really out of a tremendous abundance of caution that many of these actions have been taken in the Wuhan provinces and other provinces in China, which are essentially on lockdown. So what does that mean right now? Well, when this virus first became prevalent, the stock market and the bond market instantly reacted. Bond yields dropped significantly and bond prices rose significantly. And when I speak about bonds, I'm talking about government bonds. And the stock market has become much more volatile as a result of this as well. Just this past Friday, markets dropped considerably, with the Dow Jones dropping over 600 points in just one day. But in the following days, the market has recouped all of those losses and then some. Why has that happened? Well, so far earnings have been quite good. So far, this has been somewhat of a contained situation. And central banks have indicated that they are going to remain very accommodating, which simply means that interest rates are likely going to remain very low. But we are being very cautious as we look forward because there's just so many things that no one can know at this time. The biggest issue that we see is, could this affect the supply chain of goods and products that get shipped around the world? That's a big issue. So far, the companies that we've spoken to have not been impacted by this, but the recent quarantines are a relatively new event. If the virus gets worse and the government in China requires people to stay home and not go to work, that could impact the products we buy from China and products that go into the supply chain. Thinking of companies like Apple or other technology companies that source products in China and around the world, those could be materially impacted if this goes on further. But I'm optimistic that this is so far an isolated situation. And looking at other viruses and pandemics that have gone global, I look to see what the financial impact was of those situations as well. The recent bird flus and SARS epidemics over the last 20 years did have an economic impact in China and around the world. However, that tended to be relatively short in duration, and the economies got back on track relatively quickly. The markets have also responded recently to actions by China to stimulate their own economy, possibly in counteracting some of the dramatic economic slowdown that they're seeing as a result of basically keeping everybody in their homes at this time. And clearly fear plays a big role in this, as people in China and many people around the world are not going to want to travel as much or move around as much, but they might buy other things. They might stream video content on Netflix and other providers. They may order in food and services, as seems to be going on within China. So there will be positives and negatives that go along with this as well. Today, in a very surprising move, China reduced tariffs on about $75 billion of goods that are exported from the United States into China. Now, that's a positive sign because it functions almost as a tax cut for the country and is somewhat stimulative as well. The US could also do the same thing, as they'll want to contain any economic spillover from weakness in China to the United States by doing the same and reducing further tariffs beyond the tariffs that were negotiated in the bill that the leaders of both China and the United States recently signed. All these are all things that we are monitoring very, very carefully, but I do believe as the year goes on, this will get behind us. We're unfortunately at the early part of the cycle of how a virus spreads, and the news is likely to get worse before it gets better. So far, the stock markets have brushed that off. We are not being complacent at all. We are monitoring the situation very carefully, and as I mentioned earlier, our portfolio managers and analysts are on heightened supervision of many of the companies that we follow that could be impacted by any disruptions in supply chains that could affect the earnings outlook for their businesses. So with that, I want to conclude that the longer term is what we typically focus on. There is going to be some volatility in the markets. We're going to try to use the volatility to our advantage as best we can by optimizing our portfolios as best we can. But I do believe that this will be something that will pass. It's likely going to take a few more months before we get to total resolution on that. And my original forecast that I shared with you back in early January should hold true, that economic growth in the United States should spread to other economies around the world, and we should see a global synchronized growth for earnings, and that would be where I would be more optimistic that stocks will do very well this year, bonds will do less well this year, and you should remain constructive on equities. We do think that we're going to be cautious in the near term, but that does not affect the bullish outlook that we have on a longer term basis. So with that, if any of you have any questions or comments or concerns, please direct them to the people you speak to at Palisade Capital. If you want to speak to me directly, I'll be more than happy to chat with you by phone. Thank you very much for listening today.
The information contained in this webcast reflects the views of Palisade Capital Management, LLC, as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.